The mistake is seeing trading as a skill set. It is not. It is an identity shift. You do not simply learn how to trade. You must become a trader. Every single person who enters this arena goes through an invisible evolution, a psychological transformation that is far more demanding than mastering any chart pattern. If you feel stuck, if you are trapped in a loop of profit followed by immediate collapse, it is because you are trying to upgrade your tools while ignoring the operator. Your strategy is only as good as the mind running it. The market is not testing your knowledge. It is testing your nature. The early levels of this evolution, Level 1 and Level 2, are defined by external seeking. We chase the perfect indicator, the holy grail setup, the secret community that has already figured it out. We believe the solution is always out there, hidden behind a paywall or embedded in a complex algorithm. We look for certainty in a game built entirely on probability. This is the fundamental, foundational misunderstanding. The market gives you exactly what you put into it. If you bring fear, it gives you losses. If you bring overconfidence, it gives you humiliation. It is a perfect, unforgiving mirror of your internal state. It reflects back every insecurity, every weakness, every impulse you try desperately to suppress in real life. And this brings us to the most dangerous place. Level 3. The hidden stage. This is where most of you watching this video are sitting right now. You are proficient. You can draw trend lines. You understand order flow. You know the difference between accumulation and distribution. You are intellectually ready. But you are financially inconsistent. You are trapped in the purgatory of break-even trading, occasionally tasting success just long enough to keep you hooked before the inevitable drawdown resets the clock. Why? Because you still operate from the old identity. You are trying to force a professional outcome with an amateur mindset. You know what to do, but when the pressure hits, when the capital is exposed, you still revert to the child who wants to be right, not the adult who wants to be profitable. This is the difference between having a strategy and embodying a strategy. This is the critical paradox of profitable trading. You think you are reacting to the market. You see a big red candle, you panic, you sell. You see a sudden breakout, you jump in late, chasing momentum. You believe the chart is dictating your emotional state. But this is completely reversed. You are not trading the market. You are trading your own reactions to the market. The price action is simply the trigger. Your fear, your impatience, your need for instant gratification, that is the position you are actually taking. You are trading the gap between expectation and reality. When you lose, you do not lose money to the market. You lose money to your own lack of discipline, your own refusal to accept what is. Stop blaming the charts. They don't care about your mortgage. This realization that the battle is internal is the doorway out of Level 3. But it requires an identity crisis. You have to ask yourself the question that separates the consistent from the hopeful. Are you seeking profit, or are you seeking certainty? Because those two things cannot coexist in this domain. Certainty is a psychological need. Profit is a probabilistic outcome. Until you resolve this core conflict, until you stop trying to control the uncontrollable, you will remain stuck, endlessly cycling through the same mistakes, regardless of how many new indicators you install. We must stop talking about setups and start talking about the self. Let's break down the 5 distinct levels of this invisible evolution, starting with the beginner who is blinded by hope. This is Level 1, the gambler. You are high on enthusiasm and 0 on realism. The market at this stage is simply a slot machine with better graphics. You are treating trading as an exciting hobby, not a serious profession. When you win, it confirms your brilliance. When you lose, it was simply bad luck, market manipulation, or the news cycle. You have 0 concept of risk management because you believe you can simply will the trade into profit. You have no stop loss, or if you do, it is merely a suggestion that you will manually delete when price gets close. Your analysis is based entirely on hope. You are blinded by the highlight reel of the 1,000% return promised by the gurus you follow. This period, ironically, can last longer than it should if you get lucky early on, But luck is not a strategy. It is a dangerous, reckless optimism. The market always collects its debt. Eventually, the inevitable drawdown hits. Not a small loss, but a stomach-churning, portfolio-crushing event that forces the first great realization: I don't know what I'm doing. This is the painful, necessary pivot into level 2, the technician. The moment you transition to level 2, you confuse learning with discipline. You believe the solution to emotional failure is intellectual superiority. You become a data hoarder. You install every indicator, read every book, and watch every backtesting video ever created. You can now speak fluently about Bollinger Bands, volume profile, and the subtle differences between a 3-bar reversal and a morning star pattern. You are now a student of the map, desperately trying to memorize every contour, every warning sign, every potential detour. The problem: you are still unwilling to walk the terrain. Level 2 is defined by system hopping and paralysis by analysis. You find a perfect system, backtest it for a week, and the moment it hits its first drawdown, you discard it, convinced there is a better secret system out there. You are terrified of commitment. You are trying to build the perfect, unbreakable shield of knowledge before you dare step into battle. You have now acquired the curse of knowledge. You can articulate the risk perfectly. You know exactly why you should exit a bad trade. But the moment the market moves against you, that intellectual certainty vanishes, replaced by the primitive fear of being wrong. You understand the concept of risk, but you have not internalized the feeling of accepting it. You are trying to intellectualize your way out of an emotional problem. This is why level 2 is the most common sticking point. Traders spend years here, endlessly refining their entry criteria, believing the perfect setup will somehow absolve them of the responsibility of managing risk. They treat the market like a complex puzzle that needs to be solved, not a dynamic environment that needs to be navigated. You have infinite options, which means you have no plan. The market does not care about your backtest results. It does not care that you spent 80 hours optimizing your Fibonacci retracement levels. The market strips away technical certainty the moment money is on the line, forcing you to confront the real variable in the equation: you. The moment you press the button, the conflict shifts entirely. It is no longer about the technical validity of the trade. It is about your own ego, your fear of loss, and your internal capacity to execute a predefined plan, even when it feels deeply uncomfortable. The great lesson of level 2 is that the market is a perfect mirror. It reflects your impatience, your greed, and your lack of self-trust directly back at you through your P&L. If you are stuck here, open your trading journal, if you even keep one. Stop analyzing the market movement. Start analyzing your deviation from the plan. Did the setup fail, or did you fail the setup? The transition to the next stage, to true mechanical consistency, is not found in a new indicator. It is found in the brutal, honest realization that your biggest opponent is not volatility. It is the person looking back at you in the reflection. We need to stop tracking the price action and start tracking the mental state that caused the panic exit. This is where we move past the technical charts and into the deeply psychological territory of level 3. The architect. The deeply psychological territory of level 3, the architect. This is the most dangerous, most frustrating stage of your trading career. You are no longer a novice, guessing wildly. You have proven you can be profitable. You have the skills, you have the system, and you have periods where you feel utterly invincible. You have tasted the freedom that consistent profit promises, but then it vanishes. Level 3 is defined by inconsistency. It is the agonizing plateau where you make $5,000 in a week, only to give back $4,500 on a single, emotionally charged afternoon. You are the architect who meticulously builds a foundation during the day, only to return at night with a sledgehammer, driven by a fear you cannot name. You know the rules, you wrote the rules, you watch the setup form perfectly, you execute flawlessly, and you bank the profit. Then, 15 minutes later, you are entering a trade that violates 3 core tenets of your system. Why? Because the market moved and your ego demanded participation. This inconsistency is the curse of the almost winner. The internal conflict here is brutal because it pits your rational, disciplined self against your immediate emotional self. The rational self understands probabilities and risk management. The emotional self sees a blinking green candle and screams, "I am missing out. Get in now." And the emotional self always has the faster finger on the trigger. When the inconsistency becomes painful, when you realize you are running in place year after year, the intermediate trader almost universally makes the same mistake. They believe the system is broken, not the mind. This is the trap of optimization. You dive back into the charts, spending hundreds of hours tweaking indicators, adding filters, searching for the magical 1% edge that will finally harmonize your P&L. You change your moving average periods from 20 to 21. You add volume profiles. You test the max D on 5 different time frames. You are searching for technical perfection in order to avoid confronting personal failure. How many indicators do you need to hide from the truth that your system is fine, but your discipline is not? The market does not care if your EMA is set to 20 or 21. The market only cares if you respected your stop loss when the trade went south. The obsessive optimization is a sophisticated form of procrastination. It allows you to feel productive, to feel like you are solving the problem, without ever having to look at the ugly truth in the mirror, that you are sabotaging yourself because you are terrified of commitment. You are afraid of committing to the system because that means committing to the discipline. And if you commit to the discipline and still lose, then you have nowhere left to hide. This brings us to the most formidable opponent in level 3. The ego's last stand. The ego needs to be right. It is a primal, irrational drive. When you are holding a losing position and the price is moving aggressively against you, the rational self says, "Cut it now, small loss." But the ego whispers, "No, wait, it has to turn around. I analyzed this perfectly. If I close now, I admit I was wrong." And so you hold. You move the stop loss. You double down. You let a manageable loss become a devastating one, all because your self-worth became entangled with the outcome of a single trade. Revenge trading is the clearest manifestation of this wounded ego. After taking a bad loss, the ego demands retribution. It demands that the market pay for the perceived injustice. You enter the next trade not based on a high probability setup, but based on anger and the desperate need to recoup the money, which you now view as a personal attack against your intellectual superiority. The market owes you nothing. It is a cold, indifferent machine. When you feel personally attacked by a red candle, you are projecting your internal conflict onto the charts. You are treating the P&L statement not as feedback, but as a report card on your value as a person. This is the psychological wall that breaks almost every intermediate trader. They cannot separate the trade result from the self. To break through level 3, you must master the art of radical acceptance. You must accept deeply and fundamentally that uncertainty is the only certainty in the market. Your system will produce losing trades. Your analysis will sometimes be flawed. These are statistical occurrences, not moral failures. A losing trade does not make you a bad trader. Breaking your own rule, that is what makes you a bad trader. The shift required is monumental. You must stop trying to control the market and start controlling your internal response to the market. You must learn to treat the P&L as mere data points, as objective feedback that informs your next action, devoid of emotional charge. You must become comfortable being uncomfortable. You must embrace the fact that you will put on the perfect trade, follow every rule, and still lose money, and it will be okay. That feeling of detachment, that stoic indifference to the immediate outcome, is the key to unlocking true consistency. The greatest control you can ever exert in trading is the control over your ego. You must surrender the need to be right. You must surrender the expectation of a specific outcome. You must surrender the illusion that you can predict the future. This brings us to the ultimate paradox of level 4. Because to finally win the game of trading, you must first surrender control entirely. You must learn how to let go of the reins, trust your process, and trade not with hope, but with statistical certainty. When you master that surrender, the market stops being an enemy and becomes the ultimate partner in your self-discovery. The surrender we speak of is not defeat. It is the ultimate strength. It is the conscious decision to drop the heaviest burden you carry, the desperate, suffocating need to be right. When you are fighting the market, you are fighting for certainty. You are demanding that this specific trade, right now, must work. That demand is the root of all your suffering, the impulse that makes you widen a stop-loss or add to a loser. Surrender means giving up the illusion of control over the outcome, and instead taking absolute control over your behavior. It means accepting that your system is imperfect, you are imperfect, and the market is inherently chaotic. The paradox is this: only when you stop fighting for certainty can you start trading with true confidence. The shift is stark. Level 3 traders are outcome-oriented. They wake up focused on the P&L target. They calculate their self-worth based on today's green or red number. The Level 4 trader is exclusively process-oriented. The P&L is irrelevant in the moment of execution. All that matters is, did I follow the rule? Did I respect the setup? Did I honor the stop-loss, even when my gut screamed otherwise? You must stop asking, how much money did I make today? And start asking, how perfectly did I execute my plan today? If you executed perfectly and lost money, that is a successful day. If you violated your rules and made money, that is a catastrophic failure. This is where the mirror is held up. Trading reveals your true character. Are you willing to trade a perfect process for an uncertain reward? This leads us directly to the power of monotony. We romanticize trading as high-octane excitement, but professional trading is boring. It is the disciplined, ritualistic, often agonizing repetition of the same small actions over and over until they are ingrained. The edge only works across hundreds of samples, but you are only given one sample at a time. The market is constantly trying to tempt you out of your routine, offering thrilling setups that are outside your rules, promising quick dopamine hits. Your job is to become a machine of adherence. You must thrive in the repetition. If you cannot find peace in the monotony of perfect execution, you will always be chasing the adrenaline spike that precedes the inevitable account drawdown. This is the core concept of Level 4 mastery. You are trading the edge, not the money. The money is simply the fluctuating scorecard of your statistical advantage. When you take a trade, you are not betting your rent money. You are deploying a statistically validated edge that has a known probability of success over the next 100 trades. The capital is just the fuel. If you focus on the fuel, you crash the vehicle. If you focus on the trajectory, the system, the rules, the mathematical truth, the vehicle flies true. Every trade is just one more data point in a vast experiment. Do not treat that data point as the final exam. Treat it as a necessary input. The moment you personalize a trade, the moment you assign emotional weight to a single outcome, you have forfeited your statistical advantage. This surrender is most brutally tested when defining and honoring your maximum pain threshold. Every professional trader operates with an absolute, non-negotiable daily loss limit. This is not a suggestion. It is a biological safety feature. It is the line you draw in the sand, and when that line is crossed, the game stops, immediately. This rule is easy to write down on paper. It is almost impossible to execute perfectly when that internal voice starts screaming. That voice says, "You're only down a little bit, just one more trade. You can get that back." That voice, the voice of the ego desperate to prove itself right, is the single greatest threat to your longevity. Honoring the daily stop is the ultimate act of self-discipline and self-preservation. It is the moment where you surrender the battle to win the war. It is the moment where you admit, today is not my day, my edge is not present, or my mental state is compromised. And then you walk away. The emotional cost of fighting that internal voice, of violating that single rule, is far higher than any financial loss. Because when you break the rule, you break trust with yourself. And once that trust is gone, consistency is impossible. You become your own worst enemy, trapped in a cycle of revenge trading and self-sabotage. The market will always be there tomorrow. Your edge will always be there tomorrow. But your capital, and more importantly, your mental resilience, are finite resources. To conserve them is level 4 mastery. But there is one final invisible stage that separates the consistently profitable from the truly wealthy. It's the stage where trading stops being a battle of technique and becomes a pure exercise in identity. It is the final test of ego, and it is the most difficult to pass. This is level 4, the mechanical trader. You are now consistently profitable, not spectacularly, but reliably. You have achieved what 90% of aspiring traders never touch: conscious competence. You know exactly what works, and you execute it with clinical precision. You have a written plan, you follow it, and the equity curve is moving up and to the right, even if it feels agonizingly slow. And this is where the real psychological test begins. Because level 4 is profoundly, soul-crushingly boring. The thrill is gone. You no longer rely on adrenaline to enter a trade. If you feel adrenaline, you are doing it wrong. Your losses no longer trigger panic. They trigger a simple data entry. They are not failures. They are operational costs. The market is demanding that you become a function, not a person. You are trading a spreadsheet, not a dream. Your trading journal has fundamentally changed. It is no longer a diary of hopes and fears, or a retrospective analysis of why you were wrong. It is an audit log of compliance. You stop measuring P and L daily. That is noise. You start measuring adherence rate. Did I take the setup when it fired? Did I respect the stop, even when it looked like price was about to reverse? Did I scale out exactly as planned? If your adherence rate is 90% or higher, the money must follow. It is a mathematical inevitability that you have proven to yourself over hundreds of trades. If the money doesn't follow, the problem is not in your execution, but in the edge itself, a flaw you systematically test and remove. But compliance requires constant, brutal effort. This is the hidden tax of level 4, emotional fatigue. Think about the sheer mental energy required to override your primal instincts, trade after trade, month after month. The lizard brain screams, "Hold that winner longer. Cut that loser now before it hits the full stop." And you, the mechanical trader, must apply the brakes every single time. You must consciously force the hand to click the button the system demands, not the button the ego desires. You are fighting the biological wiring that has kept humans alive for millennia. This continuous overriding of emotion is exhausting. It drains your cognitive resources until trading feels less like a pursuit of wealth and more like a high-level factory job. You are profitable, yes, but you are perpetually tired. You are carrying the heavy shield of discipline, and it weighs on you. You have learned the ultimate paradox. The market is fundamentally random in the short term. Any single trade is a statistical event, a coin flip, regardless of how beautiful the chart looks. You have internalized that you cannot control the outcome of the next 5 trades. You can only control your input. This is the moment you stop seeking certainty in the chart. You understand that your edge is not a secret pattern. It is a statistical advantage, realized only over hundreds of iterations. The trade isn't about the current candle. The trade is about maintaining the integrity of the system so that the law of large numbers can finally work in your favor. You are no longer trading price. You are trading probability. The system works, but you are still fighting yourself to run it. This effort, this constant conscious application of discipline, is the wall that stops many level 4 traders from achieving true financial freedom. They are profitable, yes, but they are tired. They are still trying. They are still applying effort to maintain discipline. They haven't yet mastered the final invisible leap. Level 5 is the mastery of surrender. It is where the effort disappears, where the system becomes so ingrained, so fundamentally a part of your identity, that adherence is no longer a conscious choice but a natural reflex. It is the realm of flow, where the mechanical trader becomes the intuitive master. And that transition, my friend, requires you to dismantle the very ego that helped you become profitable in the first place. You must learn to trust the system so deeply that you disappear into the process. This is level 5, the architect of risk. The mechanic at level 4, he works on the machine. He meticulously follows the checklist. He is profitable, consistent, and proud of his discipline. But the architect, the level 5 trader, is the machine. He doesn't work on it. He flows through it. His competence is now unconscious. He's not thinking about the checklist. He's simply executing the principle. He has transcended the need for conscious effort. The system is no longer something he does. It is who he is. What does that look like in real time? It looks like accelerated pattern recognition. Where the level 4 trader sees data points and calculates probability, the level 5 trader sees meaning. He feels the subtle shift in market structure before the indicators confirm it. This isn't mysticism. This is the culmination of thousands of hours of screen time compressed into intuition. He no longer fights the market. He dances with it. He knows exactly when the setup is ripe, and more importantly, when it is toxic. His entries are clean. His exits are swift. There is no internal dialogue, just action and reaction. This is the flow state. The moment you stop trying to control the outcome and just allow the process to unfold. The most defining characteristic of the architect is emotional neutrality. A 10% gain feels the same as a 10% loss. Why? Because the outcome of this single trade is irrelevant to the system's longevity. He has achieved true statistical perspective. The P and L is merely feedback, not a judgment on his self-worth. It is raw data. This is a crucial pattern interrupt. If you are still celebrating wins or despairing over losses, you are still operating at level 4. Level 5 requires the surrender of the narrative. You are not a hero when you win. You are not a victim when you lose. You are simply the operator, executing the statistical edge. The ego that drove your early success must now be put to sleep. Risk management at this level is entirely reflexive. You don't think about where the stop loss goes. Your hand moves the moment the entry is confirmed. It's automatic. It's embedded into your nervous system. The level 5 trader's focus is no longer on managing trades. That task is delegated to his subconscious competence. His conscious mind is now focused on the optimization of capital allocation. He is asking a different set of questions. How can I adjust my exposure across different strategies? Which part of the machine is operating at 90% efficiency versus 98%? This is the subtle but profound shift from tactical execution to strategic oversight. The architect is not worried about the daily noise. He is worried about career risk. He is managing the geopolitical headwinds, the structural changes in the underlying assets, and his own capacity for deployment. He might be running 3 concurrent, uncorrelated strategies, and his primary job is to ensure that the risk parameters of Strategy A do not contaminate the performance of Strategy C. He is building a fortress of capital. He is optimizing his tax structure, his mental bandwidth, and his access to liquidity. The market is no longer his adversary. It is the raw material he sculpts. This is why level 5 traders often seem detached. They are playing a different game entirely. They have moved beyond the transactional mindset. They have outsourced the mechanism of winning and are now focused solely on maximizing the statistical deployment of capital across complex environments. This is the true meaning of scaling. Many intermediate traders achieve level 4, taste consistency, and then become complacent. They stop evolving because level 5 demands a painful realization. The mastery you achieved must now be outsourced to your subconscious, freeing your conscious mind for the next layer of complexity. If you are stuck at level 4, it is because you are still deriving your identity from the act of trading, not the result of the system. You are still holding the wrench when you should be reviewing the blueprints. The architect understands that the greatest risk is stagnation. But there is a final, invisible barrier that even the architect struggles to see. It is the realization that level 5, while profitable and consistent, is still a state of reaction. It is mastery of the known, but the market is always evolving. And to truly transcend, you must move beyond mastery into creation. You must become the source. You must evolve past the role of the architect and become something that few traders ever glimpse. What happens when your edge starts to decay? What happens when the conditions change entirely? How do you innovate without losing your discipline? That is the final stage. But the cost of that upgrade is immense. It is the cost of identity. The L3 trader, the architect, has built a magnificent structure of knowledge. They know the patterns, they understand the risk parameters, and they feel, finally, that they have earned the right to be called a professional. This feeling, this earned identity, is the precise barrier that prevents them from ascending further. To reach the final stage, you must perform an act of psychological demolition. You must kill the hero trader fantasy. The market does not reward heroes. It rewards clerks. It rewards the monotonous, the disciplined, the utterly boring execution of a known edge. The hero trader wants the 10 times return, the perfect bottom call, the story they can tell at the dinner table. They crave external validation for their intelligence. But that ego is debt. The moment you realize that your trading success requires you to become the most boring version of yourself, the resistance begins. You are asked to trade excitement for compounding. You are asked to trade the adrenaline spike for the slow, relentless curvature of consistent equity growth. This is where the loneliness of discipline sets in. Your friends, your family, the noise on the timeline, they want to hear about the massive win, the risk taken, the triumph over the machine. They do not want to hear that you risked 0.5% today and followed your checklist perfectly for the 180 consecutive day. They don't celebrate that. And because they don't celebrate it, your internal reward system starts to starve. You realize that to execute at the highest level, you must willingly cut off the need for external validation entirely. Your P&L becomes your only audience, and it is a silent, unblinking judge. Trading success at this level is less like a rocket launch and more like weight loss. It is not an event. It is a monotonous, daily commitment to a painful deficit. You know exactly what to do. Eat less, move more. But the doing is tedious. It requires you to pass up instant gratification for a future reward that feels abstract. How many days can you repeat the same perfect process without fanfare? How many profitable setups can you sit out because they don't meet your criteria, even though your gut screams to take the risk? The pain is not in losing money. The pain is in the waiting. The market is no longer fighting you. Your impatience is fighting your commitment. Your ego is fighting your spreadsheet. You are paying a heavy tax for an identity you haven't even achieved yet. The identity of the consistently successful trader. You are trading money for the privilege of suffering through the boredom required for real consistency. If you are stuck, frustrated, and angry right now, take a deep breath. That frustration is not a sign of failure. It is a sign that you are standing directly on the threshold. You know what to do. You have the knowledge. The key to the upgrade is not knowledge. It is pain. You haven't suffered enough internal anguish to finally surrender the need to be right, the need to be fast, or the need to be the hero. You must accept that the highest level of trading is simply the mastery of your own boredom. It is the willingness to sit perfectly still while the world screams around you. Once you have paid the cost of identity, once the hero is dead and the clerk is firmly in charge, something profound shifts. Discipline stops being a struggle. It becomes unconscious. It becomes the water you swim in. But what happens when that discipline becomes so ingrained that it feels effortless? What happens when the system runs perfectly, but the system itself starts to fail? That is the moment the final stage begins. That is the true test of creation. The evolution we've mapped, from the gambler chasing luck to the clerk mastering process. It's not about finding a better indicator. It is about burning away the parts of you that cannot handle the truth of probability. We spend years chasing technical edges that last months, when the edge that lasts a lifetime is internal. The market doesn't care about your strategy. It cares about your stability. The ultimate paradox of this craft is that the moment you truly surrender the need to control the outcome of the next trade, you gain absolute control over your process. You finally become unbreakable. Surrender is not weakness. It is the highest form of disciplined strength. Now, look closely at your daily habits. I want you to calculate the ratio. How much energy are you dedicating to analyzing the Fed minutes, the economic calendar, or that endless stream of Twitter noise? And how much time are you dedicating to analyzing the man or woman sitting in the chair? Your worst trade was never caused by the news. It was caused by the interpretation of the news filtered through your fear, your impatience, or your ego demanding immediate validation. Stop looking outward for the solution. The solution is already seated at your desk. If you are stuck, if you are repeatedly hitting the same P&L wall, the reason is not volatility. The reason is the volatility within you. The market is simply reflecting the discipline you bring to the table. If you bring chaos, it returns ruin. If you bring stoicism, it returns consistency. This is the final, uncomfortable realization. To reach the next level of trading, you do not need to become a better analyst. You need to become a better person. You must eliminate the character flaws that manifest as trading errors. Greed is a lack of gratitude. Impatience is a lack of trust in your own system. Revenge trading is a lack of self-respect. The market is the most brutally honest mirror on earth. It only pays you what you are truly worth, measured not in dollars, but in self-control. So, where are you on the evolutionary scale? Are you still fighting the mirror, or are you finally willing to clean up the reflection? The real work starts now. Because your P&L statement, that monthly tally you dread or celebrate, is not a record of market performance. It is the objective, undeniable scoreboard of your self-mastery. It is the grade you gave yourself on your discipline.